Hello, beautiful people. Welcome to another brand new episode of the ITU Forex class. In this week's edition, we're actually going to be talking about a pretty important topic, which it tends to stir up a lot of debate amongst traders. Okay, and the topic is no other than day trading versus swing trading, which the pros and cons are what we're going to be talking about today. And the thing with this particular topic is that it tends to attract a lot of traders who don't really understand the basis of the argument or the basis of the logic behind talking about day trading as opposed to swing trading, because one is not necessarily superior than the other. It all depends on your trading personality. For example, I personally prefer swing trading to day trading. Now, does this mean that swing trading is more superior than is superior to day trading? Well, of course not, because my trading personality it's more conveniently fits swing trading because I spend a lot less time on the screen. Because in the first place I got into trading for freedom, okay? Not only financial freedom but also time freedom. When I'm trading using the swing trading approach, it usually demands a lot less of my time and involvement than day trading requires, okay? And that's why it fits my trading personality more. But some other trader might not necessarily be, conveniently like swing trading as opposed to day trading. What I mean is, there are traders out there that just can't sleep well at night knowing that they have trading positions open in the markets. There are some traders who they just prefer to have every trade they have open closed by the end of the trading session or by the end of the trading day before they go to sleep, and they prefer to start afresh the next day. So for those kind of traders, swing trading is going to be a nightmare, and day trading would be more suited to their trading personality, day trading or scalping. Okay, so it's not necessarily about one being better than the other. It's about finding which one you resonate more with, which one fits your trading personality. Okay, and that's exactly what we're going to be talking about today. We're going to be talking about the pros and cons of both of these approaches, and then you would make the judgment for yourself depending on what you weigh as the pros and cons for your own unique situation, and then choose which one best fits your personality. Okay, so without wasting any more of your precious time, let's dive right into it. Okay, so first things first, what exactly is day trading? And obviously, like I told you earlier on, the topic is day trading versus swing trading. There are pros and cons. Okay, so first things first, even before we even dive into the topic and whatnot, what is day trading? Well, day trading simply refers to the trading style or the trading approach which involves a trader opening and closing trades within a given trading day. Okay, so for example, we're talking about the Forex markets obviously here, and as you all know, the Forex market is a 24-hour open market. But even though it's open 24 hours, obviously, we talked about this a couple of weeks back. Some of those hours are more active than the others. Like hours where you have the major trading sessions open, like the New York session, for example, or the London session, or when you have two of these huge sessions overlapping with each other. Okay? Most of the times you'd find that most of these hours where there's an overlap between two major sessions, there tends to be more volatility than the hours where you'd find, the New York session or the London session, or all of those sessions are all closed and they're waiting for, the Tokyo session to kick in, for example. Okay? Now, when you're talking about day trading, most of the times it involves a trader opening and closing a trading position within a given trading day. Like I told you, there are traders out there who just cannot sleep well at night knowing that they have open trading positions in the market, because they have those positions in the market and they're scared for the uncertainty that is inherent in the market affecting those trading positions. It's not uncommon for you to have an open trading position in the market only to wake up in the morning or wake up at night and see, the market gapping a couple hundred pips, maybe in your favor or against your trading position. That's not uncommon. And so most of the times, these traders who are day traders, they don't want to expose themselves to all of unforeseen events, okay? And that's why they prefer to have their trading positions open and close within a given trading session, okay? So again, this was the second thing I was talking about, which is the overnight exposure. Overnight exposure could lead to, for example, when there was this wars going on between Ukraine and Russia and all of those things, most traders who were trading the Euro USD, if you could remember, would just wake up overnight and just see, huge spikes in the market just because something happened or some place was bombed, and it tends to affect the currencies. Okay, so most traders who are day trading, who are not swing traders, they usually don't want to hold their trading positions overnight because of these type of risks, the risk of overnight exposure. Okay, and then the next thing is, when traders are usually day traders, what you usually tend to find is that they usually trade on charts which range from the 5-minute chart, the 15-minute chart, to the 1-hour chart. Usually, most of the times, it doesn't really stretch above the 1-hour chart all that much. Because when you're stretching above that 1-hour chart, you're now kind of delving into the realm of swing trading. Even, in fact, it could be argued that some swing traders prefer to trade on the 1-hour chart. What I mean is, especially swing traders who are using multiple time frame analysis, they might look at the daily time frame and the 4-hour time frame and all of those other time frames. But when they are looking for the time frame where they're going to take their trade entries, then most of the times what you'd find is they would kind of like revolve around the 1-hour chart. On the flip side, day traders, it's not uncommon for you to find day traders who use the 1-hour time frame or the 4-hour time frame, for example. That's as high as it goes most times, to kind of find the direction of the trend or, decide what the market is doing. But then when they want to find entries, it's not uncommon for them to trade something like the 15-minute chart or the 5-minute chart. Most of the times you'd find that it's the 5-minute chart. And part of the reason why I personally don't like day trading is that it's a bit too involved, because you would have to trade on the lower time frames. And if you're trading on the lower time frames, because of the way they are structured, let's say, for example, like the 5 minutes time frame, each candle you're seeing on the 5 minutes chart takes 5 minutes to form. So because of this, you would have to react and act very, very fast. Because unlike a swing trader who might, wait for 4-hour candles to decide whether he's going to be buying or selling, because usually his trading position is going to be held open for maybe a couple of days to a couple of weeks at a time, a day trader doesn't have that luxury. He needs to act fast because he knows that that trading position is usually going to end or get closed by the end of the trading day. So in the event of this, you need to act very fast, especially if you're looking at the 5-minute chart or whatnot. A slight you taking away your eyes away from the chart for just a couple of minutes or whatever might cause you to miss a trading position. So it requires a ton of focus and attention. Okay? So moving on. The other thing which attracts a lot of traders, especially newbies, to day trading is the fact that they can have multiple trading opportunities within a given trading day. So unlike swing traders, it's not uncommon for a swing trader to go for a whole week without finding a trading setup. In fact, it's not uncommon for a swing trader to go for a couple of days to a couple of weeks without finding any trading signal across the markets. But on the flip side, day traders, because they tend to trade a lot more, usually not only are they going to find a trading setup within a given trading day, but they might find a setup, close that setup, find another one, and take multiple trades within a given trading day. It's not uncommon for that to happen. But for a swing trader, it's not uncommon for you to find a swing trader who takes maybe just a couple of trades in a month, or even go a whole trading week without taking any trade because there wasn't a signal or a setup that they could take advantage of. Okay, so this level of patience of you going a whole trading week or a couple of trading weeks, for example, without finding any setup to take advantage of in the market, it's a lot harder for traders who like to get, the adrenaline rush of being in a trade and taking trades and closing trades and all of that. It's a lot harder for them to attune themselves to that type of patience. But for traders who have been doing this for a while, it's almost second nature. In fact, for me personally, it's not uncommon for me to not find any trade setup and not even care. Because I know that when I see the setups, I'm used to not, spending all of my time in front of the screen looking for trading setups. Okay? So, moving on. The pros of day trading, like I told you earlier on, is that there's no overnight risk. You're not going to be surprised by swap fees. For those who don't know, swap fees are the charges you get charged, okay, for leaving a trading position overnight. So because you're trading in the forex markets, when you're going long a currency pair, for example, you're actually usually going to be buying the base currency using the quote currency. And because of that, you're going to have to pay interest on the base currency for holding it, or the quote currency, and then you're also going to be incurring interest. That's what is meant by swaps. Okay, so if you're going to be holding trading positions overnight, if you're not trading on a swap-free account or an Islamic account, as they are commonly called, then you're obviously definitely going to either pay for swaps or get charged swap fees. Okay, so when you're holding trades overnight, you're going to get these swap charges. And you're also likely to get hit by surprise news events. Like I gave you the example of when there was this war going on between Russia and Ukraine. You might just have a good moving trading position, only for you to wake up in the morning and find that, okay, there was a news of some bombing somewhere in, maybe in Russia or somewhere in Ukraine or whatever, which affected the Euro USD currency pair or any of the currency pairs that are related to those regions. And then that might either move in your favor or move against your trading position and even affect you negatively, because if you're holding a trading position and this type of surprise news comes into the market, it could cause slippage in the market, which will in turn cause you to lose much more than you set out to lose on that particular trading position. Not because of any fault of yours, but because of the slippage in the market, okay? So most traders the pros of day trading is when you close your trading positions before the end of the trading session or before the end of the trading day, you're usually not going to get hit by swap fees, and you're also not going to get affected by this surprise spikes in price action and the slippage that comes with it and all of those things, okay? Another positive to this is the fact that when you're day trading, because you're usually going to be taking more trades than a swing trader, then it's highly likely for you to get feedback from your trading strategy's performance a lot quicker than they would. Because let me give you an example. For a swing trader, like I told you, it's not uncommon for a swing trader to take maybe 1 or 2 trades within a given trading week. In fact, there could be some weeks that a swing trader would have no trade setup whatsoever in the market, and he'd have to stay flat without taking any trading positions. Okay? So it's not uncommon because of this for a swing trader to just take a handful of trades, maybe a couple hundred trades across a couple of years of trading. On the other hand, for day traders, because of the high frequency of trading which they get involved in, it's not uncommon for a day trader to take more than 1 trade within a given trading day. And because of this, they're usually going to take a lot more trades than a swing trader. And so they're going to get feedback from the performance of their trading strategy a lot faster than a swing trader is going to get. Now, does this mean that because they're taking more trades than a swing trader, the performance or their trading strategies or trading approach is superior to swing trading? Of course not. Because like I told you, in fact, what I found, part of the reason why I leaned more towards being a swing trader than a day trader is that I found that in trading, less is more. Taking a lot less trades sometimes might even improve your bottom line more than taking more trades would. Because sometimes, more often than not, and this depends on your edge, this depends on your trading strategy. But what I found is that when you're taking more trades in the market, you're overexposing yourself to, the varieties of things that could go wrong. And so less is more in trading. Just because you found a trading strategy that gives you trading signals maybe 5 or 6, 10 times a day does not mean that the trading strategy that gives you maybe 1 or 2 trade setups in a week is going to be less profitable than that one. Okay, so it's all a game of, like I told you, I'm giving you this pros because I personally prefer swing trading, but this does not mean that swing trading might be the thing for you. Okay, so you need to weigh the pros and cons for your unique situation and then choose which one best fits you, which one is going to be more convenient for you. Okay, if you're somebody who has a job, or you're somebody who has a regular 9 to 5, or you're a student or something, you have a task or business or work or something that demands a lot of your time, obviously day trading is not going to be for you. Because for you to be properly day trading, you'd need to be in front of your charts, a lot of times for a lot of hours, so that you're not going to miss trade setups or miss the opportunities to manage your trades properly and all of the things that comes with that. So if you're somebody who is busy, then you might want to consider swing trading, because with swing trading, you might only look at the charts like maybe once or twice in a day to find maybe when you have a trade setup so that you could place the setup or manage your trading positions. But with day trading, that's not going to cut it. Okay, so you need to consider all of these things before choosing a particular methodology to work with. Okay, now again, day trading is going to offer you more opportunities, but like I told you, more opportunities does not necessarily mean that you're going to get better setups. Less is more in trading. That's what I found. Okay, so there's the compounding potential. Obviously, when you're consistently trading, you have the daily gains and you can scale into trading positions and all of that and quickly gain discipline for your trading edge. Now, these are the pros of day trading. Let's quickly talk about the cons. Okay, like I told you, there are pros and there are cons to all of this. Okay, so the main con is like I told you just a while ago, the mentally demanding nature of day trading. Because if you're day trading, then a lot could happen within 5 or 10 minutes that you just take to, go to the restroom and come back, or take a couple of minutes to take lunch. And when you miss these type of setups, this could open the gateway for you to start trading emotionally by taking revenge trades or FOMO, all of those things, okay? So it's mentally demanding. It demands a lot of your attention and your focus, okay? And that's why I really don't think I want to, exert that kind of effort in trading, because trading is supposed to be kind of like a getaway for me, where, I'll just spend 1 or 2 hours doing something a couple of weeks and that's it. That's why I prefer swing trading, okay? Again, it's screen time heavy, which is what we talked about earlier on. It alluded to this fact, mentally demanding. It's screen time heavy in the sense that you'd need to be behind your trading screen for hours on end for you to spot trading opportunities and take advantage of them. And again, if you find these trading opportunities, this does not mean that just because you're getting more trade setups, you're going to get more wins. That's not usually the case. In fact, from my back test for the strategies that I've tested, less is more. I found that the strategies that give me less trading opportunities tend to be more profitable because they reduce your exposure in the markets. Okay? Again, the third one is overtrading risk. You see, more setups is simply more temptation. Okay? Because you might see a lot of setups and you could easily get lured into breaking your rules or breaking any of those psychological defenses that you're meant to have when you're trading. Okay, so again, it leads to emotional burnout. Okay, so moving on, now we've talked about day trading. Let's move on to talk about swing trading, its pros and cons and how it works. Okay, again, like I told you a while ago, swing trading is the approach of trading which usually requires traders to have their trading positions open for anywhere from a couple of days to a couple of weeks, as opposed to day trading where you're going to have your trading positions open and closed within the same trading day. For swing traders, it's not uncommon to see swing traders to not only hold their trading positions open overnight, but even sometimes for a couple of days at a time or a couple of weeks at a time. Okay? Again, most times you'd find that swing traders are trading with, or maybe they could be trading with the 1 hour charts, like I gave you the example, but they would be using higher time frame charts like the 4 hour chart or the weekly or the daily chart to identify their bias or identify the direction of the trend and how they are going to position themselves in the market. The 1 hour charts that they'll be using, or less than that, is to pinpoint their entries. Okay? And then align themselves with the higher time frame move. Okay, swing trading allows traders to, because you're usually trading in line with or in alignment with the direction of the higher time frame charts. Swing trading allows traders to capture more of a move than day trading would, because obviously if you found a market that is trending, and that trend is going to last for a couple of days or a couple of weeks at a time, for a day trader, usually is going to be in and out of the market by the end of the day. Okay, but for swing traders, a swing trader could open the trading position in the direction of that trend and hold that trading position for days at a time or even weeks at a time. It's not uncommon. Okay, so the pros of swing trading, like I told you earlier on, swing trading is great for people who have jobs, people who are busy, because it requires a lot less of your time commitment. Swing trading might just require you to just take 2-3 hours or whatever the case might be within a whole trading week to identify trade setups and place those trades and just move on with your life. Okay, it's great for people who've got jobs and businesses. Okay, but it's not too ideal for people who have a lot of time on their hands and people who prefer to, be in the action of the market and sit behind the charts and watch the screens and do all of those things, because that could even act in negatively, not in your favor. What I mean is, let's assume you're somebody who has a lot of time on his hands. It's not as if you go to a regular 9 to 5 and you've got all this time on your hands and you want to trade. Okay. Now, if you chose the swing trading approach, where you just place a trade, maybe it takes you like 5 or 10 minutes to place a trade, and that's all you need to do within a whole trading week, then constantly being in front of the charts and watching that, babysitting that trading position is going to feel like watching paint dry. And so instead of just placing your trading positions and setting and forgetting them, if you have all that time, you might be looking at the trades and micromanaging it, which is going to work against you. And so if you are this type of person, then swing trading might not be for you. It might be much better for you to choose something like day trading or scalping even. Okay? Again, moving on. The second advantage or the second pro of swing trading is the fact that you usually tend to catch bigger moves in the market. Like I told you, a day trader, even if there's a strong trend in the market, usually he's going to be in and out of that trading position or in and out of the move between the beginning of the day to the end of the day. But for a swing trader, he could take that trading position and ride it for weeks and really squeeze out the meat and juice and potatoes of the particular move, that particular trending move. Okay? Again, the third pro is that since you're trading on the higher time frames, it's usually going to give you a lot less noise and false signals in the markets. Okay, there's also going to be less emotional pressure to perform because there are fewer decisions for you to make. Like I told you, it's not uncommon for a swing trader to go a whole week without finding a trade setup, or to just find 1 or 2 trade setups and place the trade, and that's it. Just placing the trades and setting them and forgetting them. Maybe at most managing the trades taking like 5 or 10 minutes, every couple of hours or every couple of days to manage those trading positions, and that's it. Okay. Now, what are the cons of swing trading? Again, like I told you, like any other thing in trading, there are pros and there are cons. There are advantages and disadvantages. You need to weigh both of them and then decide which one is much better for you, for your unique situation. So the first disadvantage of swing trading for some traders might be the fact that it leaves you open to overnight risk. So as opposed to a day trader who would be flat by the end of the day, he would have no trading position. He's not long or he's not short. He's having all of his trading positions closed by the end of the trading session. A swing trader is usually going to have his trading positions open overnight. And because those trading positions are open overnight, especially if you're trading on a swap on an account that is not a swap free on Islamic account, then you're going to get hit by swap charges or swap fees, and you could get all those surprise news events that could affect the market, which could cause slippage to affect you. All of those, by leaving your trading positions open, then you're getting yourself exposed to those scenarios. Okay, so you just need to make peace with the fact that this could happen or this would happen if you've chosen swing trading as your style of trading. If you're okay with all of this, then you could go ahead. The second thing is, like I told you, swap charges, and I told you these are all parts of the fees that you could get hit by when you've chosen to hold your trading positions overnight. Third is the patience that it requires. You see, most traders would be like, okay, it's simple. Trading is simple. Find a trading strategy that works. Place a trading position with proper risk management and just wait for the trade to either hit your profit target or your stop loss. Now, that is easier said than done. What I mean is, if you're somebody, especially if you're somebody who is a swing trader, for a day trader, his trading positions patience is not that much of a thing, because usually his trading positions are only going to be open for a couple of minutes to a couple of hours at most. Okay, but for a swing trader, it's not uncommon to find a swing trader opening a trading position and then holding those trading positions for a couple of days to a couple of weeks at a time. And just imagine you holding a trading position open for a couple of weeks, and that trading position comes all the way close to your profit target, just a couple of pips away from it, and then goes all the way back to hit your stop loss. And you've been holding that trading position and watching it go in profit and back and all of that for a couple of weeks. It really tests your patience. That's what I'm trying to get at. Okay, so swing trading really tests your patience. If you're somebody who is not too patient with having your trading positions open and not really bothering about them, then swing trading might not be for you. Okay, and last but not least is the fact that it's slower growth that you're going to find when you're swing trading, because obviously there are fewer trades that you're going to take, and it's a bit boring. Swing trading is a bit boring, but I prefer swing trading because of the less time commitment that it has. Okay, so at the end of the day, you know yourself better than anyone. So you need to weigh the pros and cons of both of these trading methodologies and then choose the one that fits your personality more. Okay, so this pretty much brings us to the end of this week's edition of the class. But before we wrap up, I'd like to use this opportunity, as usual, to invite you guys to test out or try out our suite of bots, which are robots or expert advisors, which are designed to trade on your behalf, find low risk, high probability trading opportunities on your behalf, and then place those trades when you follow our proper risk management with proper risk management. And so they will get you up and running, hopefully earning for you while you're while you're learning how to earn yourself, with a portion of your portfolio to automated trading and a portion to manual trading. So if you're interested, please reach out to us on any of our social handles or drop a question or comment in the questions comment section, and then we'll be more than happy to assist you set everything up and walk you through how to set everything up step by step. In the meantime, I sincerely appreciate you taking time out of your busy schedules to come to these classes and being as interactive and committed to learning and improving your trading performance as you've always been. I look forward to seeing you guys in next week's edition of the class, and have a wonderful rest of your trading week, and God bless you all. Cheers.